We're just a few days ahead of an important European Council meeting. There's been a number of discussions around this meeting. Banking union on one side, discussion about budgetary integration, political union, and of course a discussion about a growth agenda. What do you think are the important topics, and what do you think are the likely outcomes of this summit?
Well, I would say all the topics are very important because we live really in extraordinary times. The situation is extremely tense, market uncertainty is very, very high. People fear really the collapse of the euro and of the whole construct. So there will have to be very difficult discussions and very clear decisions to be taken. And I think we have to have more discussions about what a banking union means and how it is really put in place. But also the issue of economic growth, I think, is really a crucial issue, but I would argue they also relate. So banking union and growth relate. One of the main reasons for very low investment and very low confidence in economic activity and in consumption at the moment is the high uncertainty that this crisis generates. So we see, even in a country with very good fundamentals such as Germany, we see investment to be extremely weak. So in other words, a good solution to the Eurozone crisis, which probably involves a banking union and some form of political union, will also be instrumental for growth. So I think this is really has to be treated together.
More specifically on the banking union, you're releasing a paper on this topic, which has been heavily discussed, but where there is very limited clarity. Can you explain concretely what a banking union is, and why is this so necessary now?
A real banking union would involve an element of supervision, where you supervise banks centrally throughout the Eurozone or the EU as a whole. You would have to have an element of common deposit insurance so as to prevent deposit flights. You obviously have common regulatory elements. And finally, and most importantly, you need resolution authority. In other words, we have banks in a number of countries that are really at the limit of being viable, or are not really viable at the moment, and we fail to resolve them at the moment. So this needs to be done in order to regain stability in the system.
Okay, but why is this something that is so urgent now, and do you think this can be delivered within a reasonable amount of time? Like, aren't we, with this banking union discussion, preparing for the next crisis as opposed to solving the current one?
Well, we certainly need very urgent action on a number of points, including deposit stabilizing or reversing the deposit outflows from a number of banks, especially in the south of Europe. But we also need a credible roadmap of where we want to go, and the key will be to really combine the short term with the long term, and that is the real challenge, because obviously the long-term banking union cannot be a mean of actually addressing debt overhang that we have in a number of banks currently in some countries in the Eurozone. So we need to find a solution to the short-term debt overhang, which is very significant in some cases and may amount to 10 or 20% of GDP in some countries. Now, this needs to be resolved, and at the same time we need to see how we come from the current situation to a more stable financial banking system in the future. And this transition is really so difficult to manage. So it's much easier to conceive of a long-term vision than to solve the current problems, and that is really the danger of the summit. So my advice would be to really have a very concrete roadmap of how to go from today to tomorrow, and spell out the steps that need to be taken.
Okay. One question that revolves around the banking union is also whether this is a construct for the monetary union to stabilize the imperfection and to correct the imperfection in the initial design of the monetary union, or whether this is a construct for the EU as a whole that would involve the UK. How do you see this divide between a banking union for the monetary union and a banking union for the EU as a whole?
Well, I would say the banking union is of vital importance for the euro area, but it is certainly desirable to be happening at a larger level. Certainly countries that want to join the euro very soon should have transitional arrangements to know how to enter and how to access this monetary union and this banking union. Now, if countries clearly decide to stay outside of the Eurozone, there's much less need for them to join, but still you want to preserve the most important parts of the financial market, the integrity of the single market. So that is certainly a conflict that is there, and you want to preserve that.
Isn't, in fact, the discussion about the banking union also bringing a discussion about special interest and capture by the financial system of the regulatory function?
It is true what the experience shows of the last 2 years. National supervisors have a tendency to delay the resolution of problems, and later on the problem becomes much more costly. So we do indeed want to shift as much as possible supervisory and resolution authority to a supranational level.